In a move that has sent shockwaves through North American economies, the U.S. has enacted sweeping tariffs on imports from Canada and Mexico, causing both the Mexican peso and the Canadian dollar to spiral into a dramatic decline. President Donald Trump's latest executive orders, which impose a 25% tariff on goods from Canada and Mexico and a 10% tariff on imports from China, have not only redefined trade relations, but have also ignited a storm of speculation, fear, and economic analysis on social media. The financial markets were caught in a maelstrom when the news broke. The Mexican peso, already battered by previous uncertainties, took a significant hit, dropping by nearly 10% against the U.S. dollar in the immediate aftermath of the announcement. The Canadian dollar, often seen as a more stable currency, wasn't spared either, depreciating by around 7% in a day that many are calling Black Monday for North American currencies. Economists and traders watching the real-time fallout on platforms like X described the scene as one of pandemonium. "It's like watching a car crash in slow motion," said Maria Gonzales, a senior analyst at Horizon Investments. "The markets are reacting not just to the tariffs themselves, but to the uncertainty of what comes next in this trade war saga." The rationale behind the tariffs, as stated by the Trump administration, focuses on addressing trade imbalances, curbing illegal immigration, and halting the flow of fentanyl into the United States. However, the immediate impact has been a direct hit to consumer goods prices in the U.S., with everything from avocados to automobiles expected to see price hikes. This has led to a whirlwind of consumer anxiety, with many taking to X to voice their concerns over the affordability of daily goods. In Mexico, the repercussions are palpable. "This could push us into a recession," warned Juan Martinez, an economic advisor in Mexico City. "Our economy is intrinsically linked to the U.S., and these tariffs are like a direct economic sanction." Canadian businesses echoed similar sentiments, with the auto industry, heavily reliant on cross-border trade, facing unprecedented challenges. The global community watches with bated breath, as these tariffs could herald the beginning of a broader trade war, potentially dragging global economic growth into the mire. Posts on X are rife with predictions of a stagflation scenario for the U.S., where high inflation meets stagnant growth, a term that started trending as analysts and everyday users alike grapple with the implications. However, not all is doom and gloom. Some voices on X see this as an opportunity for domestic industries to thrive, with America First sentiments gaining traction again. "This might hurt in the short term, but it could revitalize U.S. manufacturing," argued Sam Wheeler, a vocal supporter of the tariffs on social media. In response, both Mexican President Claudia Sheinbaum and Canadian officials have hinted at retaliatory measures, although Sheinbaum announced a temporary one-month hold on tariffs after a conversation with President Trump, promising increased law enforcement at the U.S. border to tackle drug trafficking. As the dust begins to settle, the economic landscape of North America stands at a crossroads. With each passing hour, economists and policymakers are piecing together what this could mean for the future of trade, not just within the continent, but globally. One thing is clear. The world is waiting to see if this is the beginning of a new era of protectionism, or if cooler heads will prevail to negotiate a path back to stability. For more updates, follow Hot Radio News and stay tuned for in-depth analysis on this evolving story.